Asian shares edged up after President Trump played down fears of a recession, which helped US stocks stage a late recovery after whipsawing all day. However, trading was volatile following conflicting tariff updates, while progress towards a ceasefire between Ukraine and Russia briefly lifted sentiment. Now, shares advanced in Japan, Hong Kong and South Korea, while Australian equities fell, with the benchmark S&P 200 index hovering near a correction. Trump's tariffs flip-flop is adding to the uncertainty and the recession jitters. Now, this was reflected in Wall Street's failure to rebound from news of a potential ceasefire between Ukraine and Russia. Stocks gained some traction. Investors are worried about growth and the impact of Trump's tariff wars. The R word is really giving some heartache to investors. On Tuesday, investors initially cheered the news, and at one point the Nasdaq was up more than 1%. But Trump's announcement that he will double tariffs on imported steel and aluminium products from Canada to 50% weighed heavily, and traders ended the day with a sea of red across the screens. The three main indices on Wall Street closed at fresh 5-month lows. The S&P 500 is back in correction territory, down more than 10%, and the Nasdaq is off 15%. The S&P is down more than 3.4% this week, its largest drop since early August. On Monday, the S&P 500 recorded its most significant one-day drop since December 18th, wiping out over $1.3 trillion in market value and a staggering $4 trillion from its recent peak. Now, to give you some more context on this, investor losses over the past month are more than the entire GDP of India. Now, the prospect of a Russia-Ukraine ceasefire is a ray of hope for investors, but not enough to lift the darkening economic clouds that are gathering. The brewing global trade war is creating record levels of uncertainty by some measures, and businesses and consumers remain extremely nervous. The dollar crashed to a 5-month low against a basket of major currencies, failing to draw any support from the rebound in treasury yields. The biggest driver of that move is the euro, which smashed through 1.09 per dollar for the first time since October. Bitcoin hit a fresh 4-month low, but was last trading 5% higher, snapping a 5-day losing streak. And this comes as the general risk appetite is starting to recover in Asian trading hours. Bitcoin and the S&P 500 have hit their first bull market support levels, with extreme fear dominating sentiment. The OG token must reclaim the $89,000 mark for bullish momentum, or it risks falling to $74,000 or $62,400, potentially ending the bull cycle. The fear and greed index is at 24, mirroring last year's $73,000 peak, but with flipped sentiment. Price hasn't confirmed a bottom yet, with more weakness possible into April-May.